It's been a wild 15-month period for the housing market since the Fed has bumped rates 10 times to combat rising inflation. So what does the state of mortgage financing and what does the new normal look like? I'm Adam with the Walker team at Intero, and today I'm going to share the insights of market experts and my hyperlocal take here in Silicon Valley. Right now, we're witnessing a job market that is staying robust despite all the clickbait headlines, while inflation continues to be well above the Fed's target rate of 2%. What do all these seemingly conflicting signals mean for the housing market? Can we finally stop fearing a housing market downturn? And if so, what will the new normal look like? HousingWire very recently interviewed a range of experts to get their views.
Peter, would you be a good sport and indulge us and just tell us a little more?
Oh, yeah.
And today I'm going to share them with you. I would argue that we may be near trough origination volumes. For house prices, I would still argue that there's room for a little bit more to the downside, though probably not that much. That's Ben Hunsaker from Beach Point Capital Management. I think there's a lot of pent-up demand, and I think housing is going to be a positive surprise by the end of the year, in large part due to this very, very strong demand. Ultimately, I think mortgage rates will be lower by the end of the year. That's David Pastorellini from InspireX. Once the fog clears in like 3 to 6 months, more confidence to step back in, and that sets up 2024 to be a better year for housing overall. That's Arvind Mohan with Kiavi. We're seeing big pent-up demand. With all this kind of pullback, we're just seeing people jumping in to try and buy a home. We're structurally undersupplied with housing. This lack of supply is helping to keep prices elevated. If we get back down into the 5% interest rates, I think that will spur more activity, and you'll see more people moving and trading up. That's Fred Matera from Redwood Trust. By the end of the summer, I think it's brighter, only in that I think we can say that rates will have peaked. For the housing market, this is the bottom. That's John Tuhig from Holing Trading Group. We're going to continue to see a stabilization of the value of homes, and that is going to give investors, home buyers, and home builders a lot of confidence. I believe that people will find a way if they need to live in a home. And I think we're starting to come out of the period where people were fearful of a continual downward slide in housing prices. I also believe there will be greater demand from borrowers in the back half of 2023 because I think there's going to be a growing narrative this summer about how the housing market has stabilized. That'll drive a lot of millennial first-time home buyers to come off the sidelines and say, okay, now's the time. That's Ryan Kraft from Saluda Grade. The consensus seems to be pretty uniform according to the experts. As your local expert, here's what we're seeing right now. Buyers are coming back to the market. They're comfortable with the new rates in order to achieve their dream. Inventory is also very tight and most likely won't loosen up until rates come down. As Fred Matera stated, a decrease in interest rates will bring move-up buyers back into the game. In reality, why would they leave their 3% interest rates for over 6% interest rate today to move up? They're complacent and they normally represent half of our inventory. No inventory, no decline. Lower interest rates, more inventory, and more buyers jumping back into the thick of the hunt. It's a positive sign for home values regardless. As always, I'm Adam with the Walker team at Intero. I'm here to educate and navigate, not speculate and fabricate. And don't forget, we have our second quarter drawing for our referral partner contest. If you've referred anyone to us in the past, we'll do a live drawing on YouTube, so make sure to stay tuned for that video. Thank you, friends. We'll see you soon.